Hello, everyone. This is Noah and John, and we are from UrbanDigs, and it is Friday, so you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply at 7,008. Show me that chart.
Yeah, we're closing in on the seven handle, Noah. It's another week down of lower supply on average, just because demand is running so hot, supply is just being taken away.
Yeah, and that's how it rolls. Let's get into it, and we'll show you all that stuff. We're going to move on to pending sales, our measure of demand. It came in at 38.15. Show me the chart.
Yeah, another tick up, and again, the continuing story here in pending sales is year over year, and we're running. This is still 44% higher than it was last year. Now the seasonal comparisons are pretty much in an end. I think next week might be the last week we have any kind of rough comparison, because then we kind of get into COVID and everything gets all out of whack. But still, it's impressive.
That's a very good point, right? As we go into the next weeks and months, the year over years are going to be completely out of whack because we had that shutdown. So we got to be wary of it. But before we go on to the weeklies and break those down, John, I want to go to the UrbanDigs market pulse. And I just want to point out to everyone, look at what this market did. We are beyond the level of where we started. And if I look at the point right now, we're kind of back into that late 2017 level. Again, this is not price action, Johnny. This is just the level of supply, the level of demand interacting with each other and telling us which way the leverage spectrum is going and trending. And we are in the sell side of the neutral zone headed towards seller's market. It's just incredible. John, when you see this, what do you think?
I think you're absolutely right. And what's interesting is we're doing it with the level of supply we have now. We're still over 7,000 in supply. We were down from nearly 10,000 units. So
yeah,
it's really a testament to the resurgence in demand for Manhattan homes at this point.
Yeah, very resilient. Let's go break down the weeklies. I'm looking at the UrbanDigs dashboard. We're on the market ticker. I'm looking at the 1 week trends. This is how you peek around the corner. Supply, 403 things came on the market in the last week. John, show me the chart.
Well, here's what's interesting. No, that's actually up. That's up from last week, and it's up roughly 9% from last year. So things are coming onto the market. And this really is the time of the year in which we're going to start seeing 400, 500 listings coming on, because that's naturally when they come on. So supply is doing its thing as its normal in its normal way. It's just a question of what does demand look like, and we can get to that next.
And looking at demand, here's contract signed. I see 304 things were signed into contract in the last week. That looks like it's ticking a little lower. Show me the chart.
I mean, yeah, it's ticking lower, but we're still over 300. I mean, it's just gangbusters. Was last week was what, 322? This week's 304. So anything over 300, I think is, and we've talked about this before, is just fantastic. Yeah. Again, that year over year level we've been talking about. If you look last year, we're still running 30% higher. So that's where demand is right now. And that's really what's driving all of these negotiation stats higher.
Right. It's a demand story. If anything, we're starting to peak out on that, and maybe the inventory might be coming around. I also noticed that off market is way, way down. Viewers need to understand that in Manhattan real estate, sometimes there is a purge of firms listing. Sometimes you'll wake up one day and 60, 70 listings get seasonally cleaned out and put off market. That does affect that number. It did happen to us in the last few weeks, and that number was high. It did normalize and come down. So it is possible you might see net supply start to move up a little bit if contracts start to go down a little bit and that off market goes down as well. Something to keep an eye on. Now, I want to shift, John, out of UrbanDigs. We're going to go back into where the market is right now, negotiability at the time of the deal. We're looking at contract sign date. All right, for closed deals, when was it signed into contract and how much of a listing discount did they get? Blue is listing discount from original ask. Red is listing discount from last ask. Now, John, if I am a buyer, okay, first off, 7% is my negotiability. That's what it is. All right. I mean, that's the data. Let's just look at aggregate. I'm not looking at price points. I'm not looking at new dev, resale, uptown, downtown. We're looking at every piece of data we got, and we're looking at an aggregate median, 7.5%. And it was 9% a few months ago. This is the most recent data we have. And I could see from the peak of the market, we're at 9.5% during the COVID shutdown. Now, if you're a seller, I don't know. What do you think, John?
Well, I mean, I guess if I'm going to quote that famous Wendy's ad from the 80s, it's like, where's the panic? I mean, you would have thought that the discount would have been much, much higher, especially June 20, these peak COVID discounts. Everyone was expecting 15, 20%, but they're coming in 9%. Sellers are not panicking. And even during the pandemic, even the peak lockdown period, 9%. Yeah, don't get me wrong, Noah. There were some fantastic deals out there where there were some spikes in listing discounts simply because there were no other buyers except the cash buyers who were at hand. But on a
Right.
whole, no one's panicking. Prices are sort of modulating. Are they up from the year? Probably not. But are they down a lot? Not really. And it seems like
Yeah.
on the seller side, sellers are kind of, they're biding their time and they're pricing accordingly. And no one's it's not a fire sale by any means.
Yeah, and listen, we like to talk about liquidity here, right? We talk about liquidity the whole first half of the show. That's why we do the market ticker. There are bids out there, there are buyers out there, there are deals happening out there. Now you know kind of where the negotiations are happening. I mean, I don't know what other information we need to give you to kind of show you what's going on. If you're a buyer out there and you think you deserve a 15-20% discount, you missed the fear window, which was again last year. Now, if you look at this period of time right over here and you're confused with July and August, and you think to yourself, wait a second, that's kind of the worst time it was last year. That's true. But we did have a reopen, right? And we did have a reopen, and a lot of listings came on the market. And chances are a lot of deals just happened really quick. And for temporarily, you probably saw that listing discount go down. You saw it pop right back up over here and right back up over here. So my thinking is that this period of time was kind of just a false, misleading signal. It's not a trend. It was just more of a reaction to the forces of reopening until the market naturalized in this region over here.
Yeah, totally. And I think if you are a seller right here and you're looking at that 7% discount, thinking that's where I'm going to negotiate, well, fine, that might be your negotiation period. But think about what that means for the bids you're going to get. You might get bids in the 10, 11, 12% range, and that this basically tells me that I can work with that buyer and bring them down a little bit. So
That's
no
true.
need to panic if you're getting the low ball bids. On the sell side, work with those buyers, kind of get them down to that range.
That's a great point. That's a great point. And finally, we're going to put some perspective onto what you just saw. Okay, we're going to zoom out. We're going to go all the way back to January 2008. I wanted to show you how this negotiability, again, blue is from original ask, red is from last ask, how these trends fared in the great financial crisis. And of course, the blue line is always going to show you that full effect. And it just proves the point that John was saying is there was no panic, and it was a completely different dynamic that hit us this time around. Yes, if you got 15, 20, 25% off during the shutdown, you did great. Were you the norm? No way. You were a rare deal.
Yeah, you're exactly right, Noah. And it's interesting as we recover here that both of these lines are sort of trending up, and it looks like they're kind of starting to go a little bit sideways. So it
Yeah.
seems to me that, we talked about it with the pulse earlier, and now we're looking at negotiation discounts here. It seems like this market's in a very healthy place.
Exactly. We'll continue to report on these numbers. We'll let you know where the market is as much as we can. That is John Walkup from UrbanDigs. I am Noah Rosenblatt. I am also from UrbanDigs. We have our forum right over here. You got questions, we got answers. Until then, have a great weekend, and we'll catch you next time.